Hi, I'm Kristina.
And I'm John.
We are your expert mortgage team, along with a couple other great staff. We have Craig Allen, Sarah Mayhem, and more to come. Today we're going to talk about the credit report, what's in it, and how you can know about it.
Understanding your credit report and how the scores are developed is a key to maintaining a good, healthy credit score.
The FICO score is the magic word. What's FICO stand for?
FICO stands for the Fair Isaacs Corporation. They are the ones who invented the scoring model that's used in today's lending world. It is the gold standard of the scoring models. So you're going to see other scoring models out there, such as
Credit Karma, Vantage Score, other free scores that you can get off the internet.
These scores are all kind of loosely based around the FICO scoring model, but they're all weighted differently. So to be standardized, all lenders in today's market for mortgages use the FICO-based scoring model.
We're going to have a couple of pie charts up there, and you'll see that some of them are slightly different when they're the free scores, and then we'll have the FICO score module. Let's talk about what makes up a FICO score. There's basically 5 points. 35% of the score is based on payment history.
On-time payments are the #1 driver of scores. So we can't stress enough the importance of making sure your payments are on time and never reported as late to the credit agencies.
30% of the credit score is based on your debt to credit ratio.
This is why charge cards and revolving accounts, kind of two names for the same thing, are so important. And it's not about dollar amount, it's about percentages. So to get maximum scoring out of a credit card, you want to maintain your balance on that credit card at 30% or less of the limit. So for instance, if you have a $300 limit on your credit card, you want to keep that balance at $90 or less to achieve maximum scoring. I normally tell my clients to try to keep it at 20%, knowing that at times they're going to overcharge what they're wanting to do, but 30% is the target to maintain your maximum scoring from that account.
The next is 15%. That's called the length of credit.
The older your accounts are, the better off your score is going to be. And there are many times we may have a client that wants to close an account, but unless there is a cost-benefit ratio there that would adversely affect the client, we would rather see that account stay open.
10% is a mixture of credit.
The ideal portfolio for a credit profile is to have probably 2 revolving accounts and 1 installment loan. Something in that ratio. You don't want to get super heavy into installment with no revolving or vice versa. So there needs to be a balance of revolving and installment type activity.
The last one is recent credit.
Basically, that just means your most recent activity is going to have much more weight in the scoring model than something that happened 4, 5, 6 years ago.
Knowledge is power. So get to know your credit score. If you're interested in your FICO scores and you're thinking in the future you're wanting to buy a home loan, you should give us a call or text 48421, the word EASY.
You can call us at the numbers below. Ask for your expert mortgage team when you call in. One of the things we pride ourselves in is working with people and trying to develop their credit to the point where they can become a home buyer. Nothing's more rewarding in our jobs than having worked with somebody 6 months to a year, getting their credit built to really get them into a position where they are qualifiable for a home loan.
And the best part is if you call and we get to say, guess what? You're approved for a home loan. And you won't know until you give us a call. So please call us, text us, email us. We're there to help. Stay tuned for more tips about credit and credit scores.
So give us a call, text us. If you just have questions, we would love to speak with you to see if we could help. We truly want to be your expert mortgage team.
Thank you.